Welcome back, everybody, to Volatility Trading Strategies. So we had a great question yesterday from our live stream that I want to unpack further because this will affect all of you. And if you're not tuning into my weekly live streams, you need to start doing that. There's very few places you can go to get your investing questions answered, so definitely join our live Q&A every Friday at 1 p.m. Eastern Time. But what I'm going to talk about today is everybody's most hated subject, taxes. How can we keep more of the money we make investing? So I'm paraphrasing the question a little bit, but essentially it was, although my VTS portfolio performs way better than buy and hold does, wouldn't having to pay taxes on it reduce the long-term edge compared to buy and hold? So it's a great question, and it does illustrate the point that there is a general idea out there, and an incorrect one I might add, but many people do believe that they have to choose between a lower returning buy and hold portfolio that's tax efficient versus a higher returning active trading portfolio that you would have to pay taxes on. And some people might think you're just better off with the buy and hold portfolio. They'll say you can just hold your investments in a tax sheltered account, like an IRA, for example, if you're American, and just not pay taxes on it. Those would be deferred. And yes, that's true, but my VTS portfolio is also completely tax efficient, and it can also be held within one of those IRA style accounts. So this is my daily email that goes out to the VTS community. This one was for last Friday. We've got all the updated volatility metrics, and we use these to actually generate our trade signals every day. There's a blog that will either be an article or maybe some announcements that we have coming up, and then a useful clip. I think I'll just choose something every day and people will find it an interesting little 2-3 minute watch. But down here, you can see our actual portfolio. Currently, it's made up of 5 individual strategies, all with a 20% allocation for each of them. This is what we call the VTS Total Portfolio Solution. We call it that because these strategies cover all the major asset classes like stocks, bonds, gold, utilities, real estate, short volatility, long volatility, as well as market neutral option strategies like iron condors and butterflies. This total portfolio solution is designed for someone's entire investing capital. You don't need to piece together multiple different services. This portfolio covers everything an investor needs with maximum risk management. Now you might be thinking, wow, that really looks like a complicated portfolio. It must be difficult to follow, and it must also not be tax efficient. Well, respectfully, you'd be wrong on both counts. Each of those 5 strategies only trades on average about 2 to 4 times per month. When averaged out long term, that's really only about 1 trade per day, 2 minutes or less, and you're done. Maybe add a few minutes to read the daily email, but we're talking about a maximum of 5 to 10 minutes a day. Trust me, anybody from any background can easily follow my portfolio. But if we continue down here, we can show the first strategy called defensive rotation. It holds long-only ETF positions in either bonds for really low volatility periods, the NASDAQ index for all of the stable markets, and then either the utilities ETF or full-on cash for times when there's elevated risk and uncertainty. Our volatility metrics define when those risk periods arise. Now, all of these positions can be held within a tax-sheltered IRA account. They're totally tax deferred. This next strategy is called tactical balanced. Similar functioning, we're analyzing volatility metrics to make sure we're in the best positions with the highest probability of success. This one will either be holding the Dow Jones index for stable markets, cash or US treasuries when risk is rising, and then gold when markets are all out crashing. Again, totally tax efficient and can be done within an IRA. Our next strategy is called strategic tail risk. And this one, as the name suggests, it does have a tail risk component. So we're holding the S&P 500 during all the very stable market periods, either cash or the real estate ETF called IYR when market risk is rising, and then a long volatility position when we're trying to profit from a major market crash. Again, all of this tradable within an IRA. And now we move on to our 2 option strategies. The first one here, called volatility trend, it uses what's called butterfly options to take short volatility positions in either VXX or UVXY. And we can even use the new one, UVIX, when the volume ramps up. Now, if that sounds really cool, but you have no idea what I'm saying, there's a great video here explaining the entire strategy. You should check that one out later. But what some people don't know is these defined risk spreads, like butterflies, they can be traded within tax-sheltered accounts. They don't require margin accounts. You can do this all in a cash IRA account. That means that you can gain exposure to the amazing world of short volatility, have the risk management in place of defined risk options, boost your rate of return, but you get the same tax benefits as the S&P 500, for example, both tax deferred in the same account. And then our last strategy is called VTS Iron Condors. It's also a defined risk option strategy that can be traded within a tax-friendly IRA account. I personally believe that every investor out there does need an Iron Condor strategy within their portfolio. All of us will already have enough exposure to benefit when the stock market is going up, right? As the old saying goes, everybody's a genius in a bull market. My guess is your portfolio is going to do just fine when stocks are going up. But you do need something in your portfolio that can perform reasonably well when that's no longer the case. There are years when stocks are either flat or actually going down. Do you have anything in your portfolio that will do well under those conditions? Just as an FYI, in 2022, of course, the stock market was down. It was a really bad year. But my Iron Condor strategy was up 26% last year. It was a great environment for capitalizing on all those choppy periods and the elevated volatility. Iron Condors are non-directional, and they can actually still do well when the overall stock market doesn't. Everybody needs a strategy that can do that for them. But specific to this video, our Iron Condor strategy can be traded within an IRA account. The entire VTS portfolio and all 5 of our tactical strategies can be traded within an IRA account. That means that people don't have to invest their money in one of those low-returning buy and hold portfolios that probably won't make much more than, say, 5% a year long term. You don't have to make that huge performance sacrifice just to be tax efficient. Like I said, anybody can follow the VTS portfolio in 5 to 10 minutes a day, and it can all be done within the same tax-deferred account. Now, you might have to set a few things up at first, but it's definitely doable. Doesn't seem like a difficult decision to me, but you be the judge. Claim your free 2-week trial on my website and see for yourself whether VTS matches up to your long-term investing goals. So for an extensive volatility metrics dashboard updated daily, and to see all of the live trades for our tactical rotation and option strategies, click this link right here and claim your free trial to the VTS community. You're always welcome to join us anytime. See you next time.